Hi everyone, I'm Matt from Look Into Bitcoin. And today we're going to be going over a profitable Bitcoin strategy you can start using today. To do this, we'll be using a number of resources that are all freely available on lookintobitcoin.com, your number one source for Bitcoin information. And if you haven't already, don't forget to like the video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. So this strategy is just something I've been playing around with and have come up in the past few weeks that I think could very much benefit a lot of people who are potentially just getting into Bitcoin investing for the first time maybe, or are just trying to dip their toes into something a little bit different. Maybe they've not had too much success with their own trading and investing and are looking for something that is provably profitable over the past few years. So this is using three different components on Look Into Bitcoin: the active address sentiment indicator, which is looking at the 28-day percentage change in the amount of active addresses on the Bitcoin network and comparing that to the 28-day price change in percentage terms. And as you can see, this gives us some short-term signals once this orange line, which is the price change, crosses above and below these upper and lower deviation bands of the active address change. So we can see this gives us these short-term on-chain based signals that we can potentially use for more frequent trading or just accumulating at the most opportune moments, which is how we're going to be using this. It also combines that with the Bitcoin Investor Tool, or the 2-year moving average of Bitcoin, which is signified by this green line here, which is just averaging the closing price of the last 2 years or 730 days of the Bitcoin price action, and giving us these very clear areas of accumulation beneath and potentially even distribution once we get above this red line here. And as well as that, this 200 weekly moving average heat map. And specifically one concept that I actually did mention briefly a few weeks back in our video, should you be taking profits, and how we're going to be using this is by judging how much profit we should be taking based on the color or the value of this percentage increase of the 200 weekly moving average. So to actually show off this strategy and its historical returns, we're going to go over to TradingView, where I've collated all of these three metrics that can be individually used by Look Into Bitcoin subscribers. So I definitely recommend subscribing if you haven't already. So once we've actually collated these components into one strategy, how does it perform? So here we have the Bitcoin Investor Tool, the 200 weekly moving average heat map, and the active address sentiment indicator, all loaded up here on the Bitcoin chart, just on the daily, going back to 2014. So if we collate all of these, how exactly does the strategy work? Well, just zooming in a little bit, we're going to give ourselves some rules. So we're only going to accumulate Bitcoin once we actually dip beneath this 2-year moving average, which is outlaid by the Bitcoin Investor Tool, this green line here. So we're only going to accumulate once we dip beneath that. But how do we know when to accumulate once we've dipped beneath that? Because we don't just want to buy immediately as soon as we've crossed beneath this. So this is where we look to the active address sentiment indicator, and we're going to accumulate once Bitcoin crosses above this lower green band here of the standard deviation of the active addresses. So anytime we're beneath this green 2-year moving average and we cross above this lower green deviation band on the active address sentiment indicator, we're going to deploy 10% of our capital into Bitcoin. We're not going to try and be smart or try and time it in any other way. As soon as we get this signal, we're going to deploy 10% of our capital, regardless of price, into Bitcoin. And then how do we know how to take profit? Well, once we've crossed above this 2-year moving average, this green line here on the Bitcoin Investor Tool, we're going to wait until the active address sentiment indicator has dipped beneath this red line indicating this upper deviation of the active address percentage change. So once we've crossed above, that usually indicates that a top might be coming, but we're not going to sell until we dip beneath this. And how do we know how much of our Bitcoin to sell? Well, we're looking to the 200 weekly moving average heat map, specifically the percentage monthly increase of that, and we're selling the percentage monthly increase of the 200 week moving average heat map. So that might sound a little bit complicated, but if this has only increased 1% over the past month, we'll only be selling 1% of our Bitcoin when we get the signal. However, if we've had a very exponential and sustained increase in the Bitcoin price, such as in 2017 here, and we've increased 15-16% on the 200 weekly moving average heat map, every time we get a signal, we're going to sell 15-16% of our Bitcoin, whatever it is giving us the signal to do. So once we collate all of these rules together, how has it actually performed since 2014? So since 2014, the 1st, 2014, this strategy has returned 4,420.42%. And this isn't including the approximately 50% in open profit we currently have on this strategy. So around 4,470% profit from the start of 2014. Now, the buy and hold returns from the start of 2014 are actually less than that. This strategy has outperformed buy and hold since 2014. Now, a lot of us would snap at the opportunity to go back in time and buy Bitcoin when it was only priced at a few $100s. At the start of 2014, you could have picked up Bitcoin for only around $740, which is very cheap compared to where it is today at over $27,000. But that is only if you were to lump sum in 2014 a 3,800% return. Obviously not bad, but this strategy has actually outperformed that over the past 9 years, which is pretty incredible, really. A lot of people would disbelieve that you could actually outperform buy and hold, especially on a time horizon this long, on an asset that has moved up as much as Bitcoin. But it's not just since 2014 that this has outperformed. If you'd implemented this strategy at the start of 2018, you'd currently be up around 191%, but again, this isn't including about 50% in open Bitcoin profits, so around 240% compared to a lump sum purchase, which would only be up around 100% since the start of 2018. And then again, from 2022, implementing at the start of 2022, you wouldn't have actually sold any of your position yet. You'd have just accumulated pretty much at the exact bottom of the Bitcoin bear cycle that we've just most recently had. But since the start of 2022, if you were to just lump sum buy, you'd currently be down on your position around 40% compared to being up around 35% from your average entry point during this bear cycle. So again, just to quickly recap, we're accumulating when Bitcoin is beneath the 2-year moving average. This Bitcoin investor tool green line, once the active address sentiment indicator crosses above this lower deviation, and we're taking profit when it crosses beneath this red deviation, this upper deviation on the active address sentiment indicator, once we're above the Bitcoin investor tool 2-year moving average indicated by this green line, and we're taking profit a percentage amount in relation to the percentage increase of the 200 weekly moving average. And I know what you're thinking, this is all great, but I don't necessarily just trade and invest Bitcoin. I know we are looking to Bitcoin, but I am aware that there may be other currencies that people are interested in. But not to fear, this doesn't just work on Bitcoin. I've actually gone to crypto's second largest market cap project, which is Ethereum, implemented the same indicators, the active address sentiment indicator, the 200 weekly moving average heat map, and the Bitcoin, or in this case, Ethereum investor tool, and overlaid the exact same strategy. Now, this is hard to do exactly just because Ethereum hasn't been around as long, so the Bitcoin or Ethereum investor tool doesn't really go back past much before 2017, 2018. So if we started this strategy in 2018, your Ethereum would currently be up around 154%, but this strategy would actually be up 666%, and that isn't taking into account the just over 70% in open profit you currently be sitting on. So that's 750% profit from this strategy, the exact same strategy if we apply it to Ethereum, the exact same logic. So really this strategy is fairly robust. It doesn't necessarily just have to be for your Bitcoin trading and investing. This can be used for any currency, and especially as most of them are pretty correlated, you could use the same signals on pretty much any digital asset and it'll still probably have a fairly good risk to reward trade. So just to summarize, using a combination of a short-term on-chain metric, which is the active address sentiment indicator, a long-term market cycle tool, such as the Bitcoin investor tool, and some good risk management like we use with the 200 weekly moving average heat map, monthly percentage increases, we can create an incredibly effective crypto strategy. And compared to lump sum buying at the start of 2022, 2018, or even 2014, this strategy has outperformed buy and hold in terms of higher net profits and lower drawdowns, even against Ethereum. Overall, I think this is a great starting point for a crypto strategy using a data-driven and unemotional approach, especially for those that have just been trading and investing on a whim and a prayer based on gut feeling and potentially what they're seeing on social media platforms. Using something unbiased and data-driven such as this takes a lot of the stress out of your decision making and can actually yield substantially better results. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to live chats, in-depth newsletters, indicator alerts, private TradingView scripts. All that we covered today will be included in that subscription too. So all that and more, all for a fraction of the standard industry price. And don't forget to let me know in the comments down below on social media if you'll be using this strategy anytime soon. If you do, then you don't have to thank me. Or if you have any other strategies that you think might even be better than this, then again, please let me know. I look forward to reading and replying to all of your comments. Thank you very much for watching, and I'll see you in the next one.